Hello guys, Scott Bonovich, Mortgage Nerds here in Appleton.
Jake Knuppel, Mortgage Nerds as well.
All right, Jake, what are we going to talk about today, topic-wise?
Just rates in general, right? We want to say rates are really, really good right now. They're available, I would say, still in the twos, right?
Yeah.
And really just let everyone know that you didn't miss out, right? You didn't miss out on the ball. If you waited, didn't refinance, or maybe that you had to wait 6 months, or you're back on the job or something like that, please give us a call. We can look at your full situation here.
This is really a good time of the year for us to be looking at people for refinances for a couple of reasons. Yeah. One, namely, and most of our clients, a lot of them are escrowing.
Yep.
Right. So now that we went through this, 2020, now we're into 2021. You guys don't understand it, how it works, but basically, we don't have to rebuild what's currently in your escrow account. So in other words, you don't have to come in with that cash, or we're not having to pile it on top of your loan amount. So as long as the property taxes are paid, which typically, obviously, in most cases, then your taxes have been paid either by December 31st or they will be paid
coming up here shortly.
The end of this month. So it allows for us at its leanest to not have to collect as much money when we're trying to help somebody either lower their rate and term and rebuild in their escrows. So it's a good time for that.
Yeah.
It's not the only reason, but the other thing is, even if you're not sure, one thing I will say is that even though you've mentioned, hey, rates are still good, but they've been creeping up.
Yeah, they have been.
And so
there's a lot that goes into that too, as far as politics, the market, stock market, bond market. It gets very complex.
And I think people are getting comfortable, and you got to be in which you don't want to necessarily be comfortable because they're like, the rates have been great forever. I want to do it, but if I don't do it now, I'll do it next month or whatever. And so, with us, obviously shifting in the world power in terms of the presidential election, all those things that have happened, even in the news.
Lender capacity, all that stuff, a flow of how swamped they have been over the last, 10 months-ish here. So
the rates, don't get me wrong, they're fantastic. However, don't sleep on them. So now is the time to really take advantage of it. And again, we take more of an advisory role when we sit down. It's not just about, hey, a client might or somebody may call us because they say, we just heard rates are great. Mm-hmm. That's true. So we're going to look at the whole thing and say, we can lower your rate, keep you on the same term.
Lower your rate, lower your payment, same term, lower the terms. You can do a cash out.
What do you mean by lower the term?
Well, you can go from a 30-year to a 15 to a 20, depending on your unique situation. With rates being so low, it all really comes down to if it makes financial sense for you guys to do that.
And when he says makes financial sense, we may advise you not to do a 15-year. Mm-hmm. And there's a reason behind it. It doesn't benefit us, but again, our job is not just to take an application, take an order, and do what the client tells us to do.
Right.
They come to us for our expertise, our knowledge, and to give them, hopefully, an outside of the box type of thought process that they didn't really collect, or they wouldn't have maybe otherwise thought on their own. Well, I call it that light bulb moment where they're like, oh yeah, well that makes sense. So I don't want to go to a 15-year because, for whatever reason, because hey, if you stay on a 30, take the money that you're saving, there's different things.
You can still use that, reinvest it, and really what you're planning on using with that money too. If it's a 5-year thing, maybe you're saving up for something, or it's long-term retirement and you want to invest that money that you're saving. There's different ways to use your mortgage to help gain wealth at that point. So it's really a conversation that we need to know all the moving parts, and then kind of figure the puzzle piece out from there at that point. Yeah,
so we just want you to give us a call. There's no cost, no obligation. We get your information, we pull credit, we obviously want to make sure that what we're going to be doing for you, like you said, is financially beneficial. And we're going to lay out some potential options and hopefully bring some different ideas to the table that you didn't know were available to you, or that you wouldn't have thought on your own. And, knowing that what we're trying to do is put you in the, like you mentioned, best financial position possible with that refinance. And we've both flat out told people, listen, it's not going to be beneficial right now.
Yep.
And one of those reasons might be that, and again, this is us asking a lot more questions than maybe your typical lender will ask, but is it beneficial, even if you're dropping from a 5.5% down to a 3.5% down if you're going to move next summer?
Not gonna, yeah.
you're not going to recoup that, right?
Right.
So yeah, on paper it's going to look like you're saving $300 a month, but if it costs you X amount and your break-even point is beyond that time in which you're going to be potentially moving, then you're not going to do it. So again, that's just an example of you got to ask that client, that person, the right questions to know that what you're going to be informing them or how you're advising them is going to be correct for them.
Right. It's the bigger picture, right? So really just give us a call. Let's have those conversations. Let's see if it is financially beneficial for you to do something. It's not too late. So like I said, give us a call. Mortgages are complex.
Let mortgage nerds give you the answers you need.